recording. Welcome everybody to today's live call, and nice to see you. If you are on the 7-day free trial, well, you won't be able to see this actually because I can't stream live onto Facebook and I couldn't yesterday, so many apologies. But let's start sharing and get straight into it. Please feel free to ask questions, just mute out if you can, please, to avoid background noise. So the first thing we're going to look at today, and I will check the chat later, by the way, is just quickly look at the news. That's what we do. So Wednesday today, we've got USD news at 2 p.m. UK time. That's 3 p.m. my time in Paris, and then very late tonight, more New Zealand dollar news. So that's just at the end of this call, and we avoid trading a pair which has red flag news for 1 hour either side. So I have got one marked up, and I did hear the alert go off, but we probably won't be able to take it, but I'll go through the thinking on it. So let's have a look first of all at yesterday. We were talking about currency speed pairs, and if you're fairly new to trading, maybe think about trading on some of the slower pairs, because then you feel more confident and more in control. This one is at the opposite end of the spectrum. Great British pound, New Zealand dollar. This was a trade that I was in earlier. And this is a very wild pair, so I don't trade it that often, and you have to watch the spread on it, and that's the difference between the bid and the ask, which is the broker's price they'll give you for either selling to you or buying, and it has quite a wide spread. So as it's a GBP pair, it needs a 15 pip stop loss, and it is a crazy pair. It is crazy, so it's not one that is regularly on my list. So that's something that you may not know. We wouldn't expect you to know, and you may be getting into GBPNZD, Great British Pound, New Zealand dollar, think you've got a good trade set up, and then think, well, what the hell went on there? It just shot completely opposite direction, and that's because it is a crazy pair. So as I've said to you before, this rather scrappy sheet I've had for a long time. One day I'll probably frame it. It's my Bible, and it's got notes on it, and it's all my currency speed pairs. I have got it typed up if you want it. And I've just remembered I promised someone that I would just give them the link, because obviously we all trade together and help other people, and someone asked me to put a link in. So let me just send that over to him. Right, so on this pair, I'm on the, let me just get rid of that for the moment. I'm on the 1 minute entry. Sorry about the dog. And if I come back to where I was looking at it earlier on, it was over here. Where's my replay button? And this is a sell scan. So it was on a downward trajectory. And this is at the, this is just the yellow box at the top shows you that we are in London session. And I could see that it had a downward trend. This white unbroken line is a trend line based on magic numbers called Fibonacci. So it's actually called a pitchfork, which is just basically a trend line at an angle. And the dotted line is also off that same pitchfork. It's got 4 prongs, and there's a certain number of pips between each one. So let me just, the quarters theory doesn't, which is a line of support and resistance, doesn't always show up on the lower time frame, which so if I put it on the 5 minute, because it should show up on that, just give it a moment to load. It might be because we're on Zoom. Usually I keep it switched on all the time, and for some reason, it might be because we're on Zoom, it's been very slow to load. So quarter theory, I use it at every 50 pips, and if it doesn't load up, then it's this zero line, 2.04000 is the quarter theory, exactly on that entry there, where the red box stop loss meets the green, the entry. And that was a key point for entry after it had broken and retested off the pitchfork. So if I show you from 11:15 on the 5 minute, because we don't want to spend all this session back testing, obviously. So I'll just play it and let's see if we can. So see how fast it is. So it's broken and retested the pitchfork and quarter theory, but it is still above the moving average, which is this thick orange line. That's the 1 minute, it's called the 62 moving average. So it's measuring 62 candles, a different 62 candles depending on which time frame. So that's still pushing price up. So whilst it's broken and retested, I'm thinking, okay, this is looking good for a sell. I know it's a sell scan, it's in a downward momentum, but this is what's happening here. So I'm watching this and I'm starting to set it up, and then it starts to come down again. I'm also watching the hourly candle, which you know I do look at hourly candle closes to see where it is, and watching whether it's got big wicks on it. So for example, I won't go on to the hour, but if it had a long wick above a blue buy candle, then I would know it was failing to carry on up, and was therefore, that was a good sign for me, particularly if the body of the candle was coming below these key lines, floors and ceilings. They are support and resistance. You know, a floor becomes a ceiling, or a ceiling becomes a floor. So this ceiling here, over here, this white line has now become, I'll just maybe change that color on the Fibonacci, which you might be getting a bit confused with, as it's in white as well. So I'll just change that to yellow, so that stands out as something different. So sorry, there's so many lines, but this is why I get the precise entry of 15 pips on a GBP pair, or 10 pips for all other pairs. So it's breaking below again, and it's starting to come under this 62 moving average. So again, I'm thinking, oh good, I've now got my 3 confirmations. I must have a pitchfork touch, and then 2 other, which would be a break of quarter theory. Here you can see it's come up now, this orange dotted line, or it could be below the 62 EMA. It could be a 1 minute break of trend, break and a retest, which is this line here that we're looking at, because we're coming down for a sell. So we want it to break. We want the upward momentum to break under there and then come down. So I'm thinking, okay. And then here we are here now. So by this time I've got in the trade. It does go for 38 pips. It's very fast, because as you know, I don't like staying in trades long periods of time, and I like small stop losses, which is why I enter on the 1 minute. That's how you can use small stop losses. And I like to swing trade where I can, which is get bigger pips. So I'll aim for the 2% to 4%, that's 10 pips for, or in this case 15 pips because it's GBP, to 20 pips. I always set it at that. And then I'm looking, as I've said yesterday, when you're in a trade, you need to be thinking where you're getting out of a trade. So I'm thinking, okay, I'm going to go for my 20 pips, but can I swing it down? That's take profit 1 at 0 off that magic fib. It's just 1 click on and off with these settings. It had rejected off the magic golden ratio. Sorry if it sounds technical, but it's just a pattern, 61.8. So that was another tick in my box for confirmation. And then I'm seeing if I can get it down to 38 pips here to 40 to 44, something of that region, because price will always move to levels and reject or break and retest levels. Now it's well, not much easier. It's generally easier to go with the momentum, to go with the trend, and to get to be able to recognize a break and a retest, and then the onward movement of price, rather than try to trade a reversal. So this is a momentum, it's a break and a retest trade, and I'm looking for those 3 confirmations. Now, as you know, our main strategy is BYOB, be your own bank, and again, you'll have a confirmation checklist. You must use your confirmation checklist on every single trade. I do not take a trade unless I've got my confirmations. That's what the rules are there for, and it's extremely important, and also it's very confidence building to work to a process, and it means that you keep your emotions out of it. So by this time I've entered the trade, I'm in precisely on 2.04 as it's broken and retested. We can go back to the 1 minute because you've seen where quarter theory is. It may not load up on the 1 minute, but just so you can look at it in detail. So let's carry on playing this. So I'm right. So let me think. So I got in, this is quarter theory. So it's a broken and retested the pitchfork and quarter theory. I had got in here. So it came down, these are set at levels, that's 5 pips, that's 10, and that's my 20. And I will move my stop loss to stop profit. Now remember, this is a wild pair. So I keep it above the 62, above the moving average, a few pips above that. And this has got a big spread, which is why I don't trade it very often, because it's hard to be that precise. You need to keep, give it quite a lot of room to breathe. Otherwise, it will just zip you out the trade. So I've got in the trade, it's, I'm okay, it's still on my 15 pips stop loss, and it's come down, that's fine. It comes up here above the 62, so I'm thinking, well, it should hold because I've got quarter theory and it touches it exactly, and I've got a pitchfork, aggressive trend line based on maths, protecting me between it wanting to go back up and take me out the trade. And it's also done this 1 minute break. Can you see that break and retest of the 1 minute trend? It's got that as well. So I've got everything in my favor. And then it touches the 62 3 times. So I know it's failing to break it again. So that's good. And then I start to move my stop loss down to stop profit at 1 pip and then on to 5. And I carry on down. So let's just play out the rest of this. And there we are. I got a big move down there, a bit back up, and then it came past, moved very fast, past take profit 1, which it stalled out on. And then, to be fair, I took my profit here because I thought, well, I need, you know, this was about half an hour, 45 minutes ago, and I thought, well, I can't stay in this anyway. And I'd done about 30 pips. So there's 26. So it was something like that because it finished at 38. And let me just carry on. And there you are. You see, this is how it will. So when it reaches this point and you're thinking, well, what do I do? You've got to think, what trades have you taken before today? How many pips do you want each day? And what's your risk to reward ratio? So I stick to my 10 pip, generally 10 pip stop loss. I know this is an exception because it's GBP pairs, so it takes it down a bit. Sorry about the dog. And 20 pip take gain. So that's 2% risk for 4% gain. And I'm thinking, well, okay, trade goal of 20 pips, daily goal of 25, then I can relax a bit for the day. But you know, I don't know what it will do next because I'm thinking, well, would it go down this far? I'm not making excuses. I don't like excuses. I don't mean it to sound like that. I was very happy with this trade, but I'm thinking, well, I'm coming on this. I needed to, you know, get some coffee and sort myself out. So, you know, I took my profit round about here rather than try and swing it further down. And there we are. It reaches take profit 2 exactly on the minus 27, where it, because you can see on this fib here to where's the reject off that? There it is, rejecting exactly off the 61 along there. Okay, my favorite is the 88.6. That's where you get the big extension leg. That's the big boomerang effect, which you'll often see when you look at the harmonic scanner, that C to D leg, because price, I drew it the other day for you, moves up in that 5 leg Fibonacci. It can be 5 to 7, but usually the 5 leg. So then let's see what it's done next. So it comes back up from take profit 2. It's testing the 62. The 62 is still pressing it down. We don't really need this one any longer, that trend line there, but it doesn't really matter. I kind of keep this on. It's like driving. I always think of it like sort of driving the car, really, coming up along the carriageway, which are you on the right side of the carriageway, what you're going to do at the roundabout, etc., etc. Have you taken the wrong direction? Do you need to go back? And when you're looking at those momentum trades, when I said I like to see a break and a retest, like here, a break and a retest, think about that, because I never get in unless mostly I don't, unless I've had that retest, because if you got in on the way down and then you've got to suffer all that agony of that drawdown. It's not much fun, is it? You know, we've all been there. So think about like going to someone's house, you've knocked on the door, you've entered, and then you want to turn back. So you want to turn back and close the door behind you. So think of it as called a mnemonic. Think about it like the door closing there and then get into the trade. Be patient. That's why we say be patient with your trading. And a reversal trade would be where a rejection, where price rejects off a line and doesn't do a break and a retest, but it comes down, it rejects off and it goes back up. So it's not like here. It came down, it rejected, it went back up. So this is, you've come to the front door and you've knocked on it, there's nobody in, so you've turned around and you've gone back. So that's where it's rejected off that line. It probably did come down from there. Okay, so this is, and where's price at the moment? So there, this is why it's so wild. It's come back up, and again, this is on the hour, so this is the fake out. I always say to you, one of my golden rules is 10 minutes before the hour, I don't enter a trade, because it's the big boys trying to make you feel that you've made the wrong decision and faking you out and pushing it up. They're trying to buy it up when actually they still want to carry on down. So that's what happened on the hour just before we came on here. And then here's current price. So I haven't looked at it for the last half hour. So it's still on its way. It's still on its way down. Okay, so that's that trade on GN. I'm going to keep that markup. Usually I tidy up my charts because I'll probably do a little video on that to put in my group later on and put up on YouTube. So that's GN, it's going down to here. If you want to watch it for later, it is a sell scan. You've got two very good points here, but beware, very, very wild pair, not for novices really, to be honest. Even I very rarely, not even I, I'm not, you know, I'm competent, but I'm not, you know, just an average person. I don't trade it often at all. This one and GCAD, very fast for me. So I wanted to come on to USJPY, which is one I'd marked up as an idea. And the problem with taking this trade, although it is working out as the idea that I had posted, is that, as I said, we had USD news. So I wouldn't want to take a trade while the market is still settling down, but it is doing what I thought it would do as a trade idea. So why did I have this as a trade idea? Because it's let's show you the context. For those of you, I don't need to come out and look at the hourly, because what's happening on the 1 minute will be happening further down the time frames. The 1 minute is the current momentum. Sometimes I'll look at the 15-minute for chart setups and 5 minute, 15 minute, 5 minute for if I'm trying to swing a trade, rather than being caught up in the torture of the tiny, tiny ticks of the 1 minute entry. So this is the hourly scan. You can see it's in a downward momentum. Here is quarter theory based on maths. So it's highly aggressive line of support and resistance. Basically, you just click it on and off. All the lines are equal at 50 pips each, and that saves me having to look and think, where are the lines of support and resistance? Now, I do look left to see what's going to happen right. For example, look here how well quarter theory, how well it works, how price has rejected off that over 2 days. 2 days, it couldn't break through there. So that is a strong line of support and resistance. But why do I want to go through the charts manually marking up lines of support and resistance? And there it hits it again perfectly there to the pip, when I can just click a button on and off like that. So Mike Miles, one of our top educators, taught us that. And the guy who created it is a guy called Ilyan Yotov. And there are YouTube videos of him talking about quarter theory. But basically, who cares, who knows? All we need to know is it works, and all we need to do is, with this wonderful software and tools that we're given that do all the heavy lifting, is click a button on and off. So that's that works fine for me. So here we are back on our 1 minute. Let's just analyze what's happening. It's a shame we've got that USD news, otherwise we'd have a nice live trade here. So we've got it, what have we got on my confirmation checklist? Well, first of all, we've got the 1 minute trend, the 62. You can see how price has moved along it, stayed underneath it, and now it's shoveling it down. We've got price broken through quarter theory, and we're looking for a third confirmation. So if we want, and this is what I marked up earlier, so you can see it's doing exactly what I said it would do, but what we want to see is a 10, preferably a 10 pip break and retest. Let's just see if I can. So you might want to, this might give you another entry, it might come back and retest, you might be able to get into this, but don't get into it until the end of the session after the hour has closed. And for me, because I like to work to these 10 pip stop losses, this is a nice one because I've got between possible entry and stop loss, I've got both a pitchfork and quarter theory. I've got two strong walls, ceilings protecting me against price having to push up, punch up through and take me out the trade. So that's my alert line, the pale blue one. I just have that little alarm clock on it so I can go off and live my life and watch Netflix or go out in the garden or whatever I'm doing and wait for alerts to go off rather than sit for hours staring at charts. So let's see how many pips it has broken and retested. 6.3. So ideally I'd like to see it down to where I've marked it there on this yellow yellow line, because normally price will stall out at levels, it'll move between levels and come up. It's tested the 62, tested it again, testing it again, can't break above it, and is moving on down. So if it's just 1 pip off or it's retested the 62, I do consider that a touch, and it may not come down and do a 10 pip break and come back up. That may be all that it's going to give us. So another little thing that I've got, although I use this for exits, is called the MTFA hull, which you hear me talk about, which shows that's our confirmation for an exit. The bands at the back are prices movement over 15 minutes, and then the green and the red line, as you can probably see it flash on and off coming through price, is price either red for sell or green for buy. So if it's small little flips, you can see it's green. Let's look at this one. You can see it's red here saying it's selling, but within that you can see little green movements, which if it's too little flips, then I don't come out of a trade. But if it's big flips, then say I was in that for a buy and you see that long red flip, then I would be out the trade if it did 2 of those. And it is a lagging indicator, so although it is it's moved to red, you can see it's still saying green there, so it's about 30% lag on because obviously it's a 15-minute band at the back. So that's still saying red. That's all well and good. So it may well carry on down. So I mean, you would have an entry there, but as I say, I don't want to take it because of that rule about not trading for an hour after news, and we've still got half an hour to go. But there is a trade there, but there'll be more of those. I'll you know, obviously give you those, and then your next level to look at is down here, where let's go back to the hourly, see where it is on the median, because unless it's a big scan of C to D leg 160 or more, then I only take trades in the direction of the scan off the D point until it hits the median, and the median is this white unbroken midpoint of the scan on the hourly. So it's just coming down to that at this point that we're talking about this particular trade. So once it comes down to this, once it's done that, then you could be taking buys back off that or carry on with the sells. You don't have to carry on in the direction of the scan, depending on how many pips and whether you're a swing trader just looking for one big move. But the reason I don't like swing trading across days is it affects your profit hugely, because someone who's doing a 50 pip, 50 pip stop loss to gain 50 or 100 pips, I'm only doing a 10 pip stop loss and I can gain 50, then I've got a much bigger percentage profit off that, and the other person's got to work twice as hard to get, 5 times as hard to gain the same percentage gain that I can gain on my ratios. So that's why I like this strategy. So look at what happens at this point. We're saying that it's going to carry on selling from the confirmations I showed you on the lower time frame. If it does that, then I'd be looking to set a 20 pip take profit and then look for price to want to come down to the next level for your next entry. If it does the 5, 10, 15, 20 pips, but then turns back up and fails to get to the next level, it'll want to come back up to its previous level. Then look at the same area again, but you can also be looking at it for a buy and not just a sell. Okay, so that's USJPY. I can give you the figures on it, but as I say, we've got red flag news, so not keen, but so you can write some figures down. And there it goes. It's just going down now. So I'll set it at the line with the 62. So you've got an entry here, if you want to write these down, of 106 point, say 925. I'll just put it on the settings. Let's show us clearly. So you could take a screenshot of that, but it is moving down now. 106.925, a stop loss of 107.025, and a take profit of 106.725 at take profit 1. You could also put a fib on it. That's just the way I like to work. Another one, confirmation we use this a channel touch. I'm not going to put a fib on this because I'm not actively getting in the trade, but I do like to use the fib to judge when I'm getting out the trade. Your take profit 2 would be down at 106 point, something like 106.545. That's 38 pips to that pitchfork. And if it breaks through that, then the quarter theory is the next key level at 106.500. Okay, and that would be 42 pips. But I always set mine, as you know, at the initial 20 pips. See where I'm going after 10 pips. I'll put a 1 pip stop loss to stop profit, and then try and move it down 5, 10, see how it's going, and take the 20 pips. If it's in strong downward momentum, carrying on with the 62, shoveling it down, then I'll be trying to stay in it and see if I can get to 25 pips, which would be my daily goal. And if I'm swing trading, then I'll start to look at I'll be on the 5-minute chart, not the 1 minute. I will have given it plenty of room to breathe, keeping my stop profit above the 62 by a few pips, so that I'm, because as you can see, price comes back up and wants to test it, so that will take you out the trade. But as I say, you've got to judge it with what trades you've taken before, because you can take more risk. If you've already made your 20 pips for the day, then you can take more risk and think, well, all right, I'll leave this at 1 pip stop profit, give it room to breathe, see how we get on. You don't have to pinch it so tightly. But if you haven't made any profit, or you're not sure if it looks that robust in its movements, time of day or whenever you're getting in, then you might want to take your profit at, also set your stop profit at 5 pips and think, well, at least I've walked away, I've secured the bag, I've got 5 pips at least, and then set it at 10 pips and leave the rest to run with a trailing stop. That's another way of looking at it, and you have to learn how to make those judgments. But the important thing is to keep your sheets and keep your compounding growth and see what you're doing within the week. So I'm aiming for 9% a week, and I'm aiming for 25 pips a day, and I'm aiming for my 10 pip stop loss, and I look generally each day at 2 wins, 1 loss, 1 break even. So that's how you've got to sort of add things up and patiently keep going. It's not a get rich quick scheme, and it's not something where you can love, it's lovely if you hit a home run and get 100 pips, it's fantastic, but it's a game of maths and patterns and just learning one strategy, and just I find it very enjoyable, very comforting. And I've got music on, or I've got things on, and I'm just repeating. I've learned a strategy that works highly successfully for me. I'm now building a team, and I find it extremely enjoyable, and I feel very, touch wood, in control as much as I'm able to, repeating the same thing that I do day in, day out. And that's what's working for me. So you just have to sort of settle in to what kind of trader you are. I like the 1 hour time frame analysis. Chance Gonan and Samantha, they're the only people that teach it, I think. I'm not sure, but I think. And it's a hybrid strategy, because we're entering on the 1 minute, which allows us to be able to use that 10 pip stop loss, have a precise entry for the tight stop loss, but yet be also able to stack in trades and gain multiple trades, because that GN one, that was too fast to do it. But you could stack your trades in, and the key to it is to have your stop profit line exactly set where you are in the green, just where the red has turned to the green on the previous trade, and then start to move them down. It's a little bit more complicated. It's not really one that you can learn quickly, but it enables you to gain multiple pips using only either a 10 pip stop loss or with no drawdown whatsoever. And that's what I like about it. So here's this trade moving nicely down. Do I regret that we didn't take the trade? No, because we had the red flag news, and equally it could do very weird things. It could have shot up the USD. The dollar could have shot up following that news 40 minutes ago. But that trade is working out quite well. So that's USD JPY. So let's have a look at CAD JPY. That was the only USD one I wanted to show you, because I decided it's not always worth looking at ones where there's red flag news. This one already missed the entry. I had the alert set up. So I go through and mark up my charts about 6 to 8 hours before. I was on Chance's call last night, or Samantha did most of the call, and that was channel 20, go live. If you want to follow any of it, you can learn all about everything you need to know as a new trader, no matter what strategy you're setting up. So they have a very good boot camp and intro. There's an intro video there, tells you about lot size, risk management, etc. And then they tell you about how to draw a harmonic scanner. And then there's advanced calls of the week, which is entries and exits, which I like, where he backtests how things have played out. And I do love the psychology call, which is Thursday at 7 p.m. UK time. I just love that call. So here we've missed the entry. We had a break and a retest there. The 62 has now dropped under, so that's 2 confirmations there. I probably could have found a third if I'd wanted it, but here's another trade playing out at the moment. So that's nothing for us on CAD JPY at the moment. Nothing on. Let me just write these down. What we've looked at, CAD JPY. Nothing on USD. CAD at the moment is coming back up to retest that. It's in its downward momentum down to this pitchfork, down to this next level at the moment. You can see that, well, it's broken that downward trend now, so it might decide it's on the turn, but there's no trade for us on that one at the moment. GBP, JPY, see how many pairs we can get through before the end of the session. So this was, and there was no point in looking at the scanner because I had looked at it several times yesterday and today, and I've got all the scans that I want. So let's just go to the 15-minute to show you this scan here. So again, a sell scan, and it is 217 pips. So you've got about 55 pips, so that's each leg. So that's double the minimum scan, so it's quite a big scan. You can see that it's coming down nicely. So it hasn't come down to the median yet. So I would myself, although it is a big scan, So I probably would say this is the exception to the rule, where you could take, if you look at this, we're on the 15 minutes, you have got a buy opportunity, got, you know, little buy opportunities coming up there. That's that was 28 pips there. Same again there. You've got one here. So you know, you can be taking opposite trades on these bigger scans. So let's come down to the 1 minute again and just see what's happening here.
Hey, Danielle can hit mute.
So it's coming up. It's rejected off there. It is in an upward momentum. So if you come to the hourly, you could draw a channel, and that would show you what price is doing. And then you could also draw channels on the 15 minutes, because where you have a channel touch is also an entry confirmation. Just see if I can get this a bit bigger for you. So this is up on the hourly. This is going to look a bit crazy, sorry. So just see if we can. And then always clone it so you have the same angle. That's very important. You want the lines parallel with this. So something you've got to decide where you're going to put it. So I wouldn't put it out that far. I haven't got enough. There on that one, I've got enough touches. I've got 1, 2, 3 touches there, and the same along here. And there is this blue one from the quarter theory. This is on the hourly, remember. So this would take more time to play out. Again, my style is not to sit in trades on hourly candles. I never ever have done it and never will do it. I'm right down the rabbit hole, and that's where I'm happy to stay. So off quarter theory on the hourly, and it's come up. If I take off my alert, it's one thing less to look at. Off that quarter theory up to there, nice pitchfork touch there. And then if we come to the 15 minute, and again, you can just do the same thing to see where you want to take trades off here, because the market is always forming channels. There's no trade here. Can you see there's no trade here? But if you're on the 15 minutes and you think, well, okay, where have I got a trade on something like this? Then let's see where we find a good example of that. Lost the quarters theories, disappeared. I don't know why it does that. Let's come back. So there's your D point. I'm on the 15-minute chart, and you're looking at where you can draw channels and say to yourself, is there a trade for me? You know, can I actually make some money off this using a channel touch? So as we've seen, that's the hour. Oh, let's come back up. I'll stick with this one then. So if we look here to say, well, all right, I'm on the 15-minute. Have I got a trade here? Then you need to have the channel touch. You need to be at the top, and you need to bear in mind where quarter theory is, or your lines of support and resistance. So you've got then a channel touch, something like that, quite steep. Don't know if we can draw it further out. That's probably might be better if I do that. And then clone it. So you're waiting for a touch at the top or the bottom. That's quite steep though, that one. There's no trade there because you've got price consolidating. That isn't a trade. You don't want to sit going sideways. In that, you'd be going sideways for nearly 2 hours, and that's no fun at all. But then you've got a channel touch here, but you've got quarter theory and your 62, so you need to kind of look where your indicators are and see if you've got enough room to make some pips in the channel. So if we just look at that particular one, was there on that sell opportunity. So you've got it coming under the 62 and under quarter theory, but it's a difficult one to trade because of these strong lines of support and resistance. So you have to kind of think, how can I make my pips? I'm always looking for 20 pips. You might be looking for 5 or 10, depending on what your stop loss is and what strategy you're using. If you're following me, then you're probably interested in learning more about this. To be honest, I don't use channel touches a lot. I prefer the 1 minute break and retest of trend and the Fibonacci. So they're kind of variants within the theme, and you have to decide what works best for you. I know Samantha Gonan, she loves channel touches, and she's a very conservative trader. By her own admission, she says, I don't like to swing trade, I like the channel touch. So some of her sessions are absolutely excellent if you want to learn more about those. So no trade for us using my typical criteria at the moment. It's in the middle of nowhere on that one, but that gives you an idea of what's going on with it, I hope. And if there are any questions, please ask. You can type them in the chat. I will check in a minute. We're just coming up to the last 10 minutes. So you see that's coming down nicely. It's respecting the 62. The market will always flow. It's flowing its way down on that one. This is GA. So it's rejected off quarter theory. It's coming above for a break and a retest off the pitchfork, and it's above the 62. This is an upward move. So it looks like, how many pips is that? Looks like it's got a little thing going on there. That's 10 pips there. So that is, I'll put a fib on that so you can see what that looks like. So from, as it's a buy possibility, up to there. Make sure you get it on precisely. And it's come back and it's rejected off that 88. So I've taken the fib from the low, swing low to the, actually I might be better off, I wonder if it'd be better off putting it over there. No, because I'm outside. Perhaps that's not working for me so well, that one. Take that off, might confuse me. And what is our MTFA doing? A bit slow, sorry guys, because it's on Zoom. So that's actually in a downward momentum still. So it could be that this is slippage, that it doesn't like trying to break through there and it will come back down. But sometimes I find price will play between the orange and the blue. So it will be testing like here, and then it decides, it wants to break out, come above. It's just quite, I think GA is quite a fast pair as well. It's not, that's a 10 as well. That's quite wild. I was just going to say it's not one of my favourite pairs. So again, it's not one I trade very much at all. It is in a buy scan at the moment. That was off a D point, 12th of May. I do put all the new scans in my group, and I'm often up very late at night anyway because I'm on various calls. So I've usually got the most up-to-date ones, but I'm only looking for ones with a minimum of 80 pips. So it has come, it took quite a while to break and retest the D point. It then decided to come down to the quarter theory level, and it's now coming back into the scan. This is on the hourly. So it's starting to work its way up through this wedge. And if you come to the most, this is the 15-minute. So if we get our bearings on it, then that's what it seems to want to do, is start to come up to this point here. So if we put, as I say, I don't like trading this pair. And it's a GBP one. So you'd want 15 minimum on it. And the other problem for me with this is I'm not covered by quarter theory, and I would like those two lines closer together if I was trading this, because it's such a fast pair. So you might want to look at that as a potential buy between 1.89210 up to that level, but it may well be falling back to quarter theory again, up to 1.89500, but it could well fail, come back down here again. You see how it's rejected off once, twice, three times, so it doesn't like quarter theory, but as it's such a volatile pair, it might come down, back down to that level again before coming on up, and it has crossed below for the sell at the moment, so the orange is under the blue, which gives you that downward trend that you can see there. You put a trend line on. So I often put trend lines on, and they are movable. You know, they're not set in stone. Once price has moved on, I do adjust them, but it does enable me to see. I did this with Connor the other day, actually. We were on Messenger together, and we were discussing what to look for. So if you drew that there, then what I would be looking for is for price to do either this, so carry on up here and stay above the 62, or break and retest that 1 minute trend line that way and say, oh no, I'm coming down here. Okay, I've just covered it up. So is it going to break and retest this 1 minute trend here? And then in that case, it's not going up, it's below the pitchfork, and it's saying, don't like it, I'm going to come back down and reject off this again. And it may play between here for a while. So that's GA, nothing on there at the moment that I like the look of. And I'll find, that's Euro USD. So that's coming on up, that's my alert, so that's obviously the pitchfork. I'll just take that off for you. So price has crossed above. We're now looking for that break and retest. It is in buy mode. It is sitting on the pitchfork. As you know, best times to trade New York between 2 and 4 p.m. UK time. That's 6.4, it's not much of a break. So a little bit more analysis needed. It needs to hold that 62. You want to see the 62 get above that pitchfork level. Draw your trend line, draw it up, see if it's just as we did on the previous one. See that it's staying above it, or is it going to do a break and a retest and come back down? So it's the same process over and over again. I may be very sad, but actually find it very enjoyable. I'm going to stop sharing in a minute. I'll just look at one more. I'll look at your EU because I like EN, because I like that one, and it's the one where I get greedy on. I always like trading Euro NZD, and I haven't looked at it at all today. So let's just see what that's doing. I haven't had any alerts go off either. What's price doing? Oh, that's why I'd stopped looking at it, because there was that big spike up there, which happened in Tokyo session. Oh yeah, there was a lot of New Zealand dollar news. So I'm on the 1 minute chart, and it is in the outer extensions, which act like the Bollinger Bands. They normally will try and ping a price back in to the scan. It's still in an upward momentum, but it could want to come back down to 50% of that big move up. That sometimes happens. And at the moment, it's stuck between pitchfork, with the outer extension, and quarter theory. So at this point, what I do is look to see if I've got any older pitchforks that I've hidden that will help me, or if not, then I draw a second pitchfork sometimes if it's going to move up out of this scan, if there isn't a new one. because pitchforks are valid forever once you've drawn them accurately, and I don't seem to have anything coming up above there, which means I wouldn't be trading it if I haven't got a pitchfork, because for me a pitchfork touch gives, I have to have the pitchfork touch to act as the reversal point to get my trade, and that's why I can use that 10 pip stop loss. So I can't see any pitchforks that are in this zone. So that's, these must be, there's one there. Oh, I've got one there. Right. Okay, so this is a purple one, purple pitchfork. If I go back to the hourly, it's now moved. So what I would do is I would hide this one. If it's going to stay in this and come outside that white one, which is my most recent one, I then obviously hide it. I'll just put the lock on so I don't lose where we are, and just before we go briefly show you where that scan is. So I just check that it's still accurate, that it's not glitched, that it's still viable, like pitchfork touches there, and just see where it is. And this was drawn September, so that's about 150, about 225 days old. And you see all those touches along there, touches there. Once you've, that's why it's worth doing the fiddly bit of drawing them on accurately on the 1 minute when we place the points, because they stay valid forever. So price is moving out of this. So if I hide this and just show you this and come down to the 1 minute again, and let's see if price, so I can still trade because I've kept all the old scans. And let's just turn off quarters theory so you can see it clearly. So it's moved into the extensions of this scan, and it's still going up. But because you've had this sharp news movement, I don't like to trade a pair where it's just done that kind of move. And sometimes price will want to come back down to 50% of that line. So, you know, it could drop back down to here before carrying on up. So I'll switch back on the white scan and just see how it plays at this juncture before finally deciding that, you know, it's moving and staying in this scan. So I'm just going to stop sharing now and just check the chat. One in the chat. Thank you. Join you again when I have more knowledge. Yeah, I know. So I know I talk sort of, it sounds technical, but it's just a bit of a shorthand, you know, EMAs and things like that. So I hope you enjoyed that session. And you've got Sharon next, and then Sarah Jane for BYOB. Very good at keeping it simple. And Les, of course, one of my favourites, on at 7 in the evening. Very, very knowledgeable indeed. And I look forward to, I hope you enjoyed that. I look forward to seeing you all tomorrow. And bye for now.
Thanks, Sarah.